The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Welcome this morning, folks. We got markets in higher territory to kick off trading this morning. We're talking about the S&Ps up 17 points, trading at 43.78. Tech stocks yet again surging higher. NASDAQ 100 up almost 100 points this morning. You're trading at 14,962. You get the Dow up 96 points, 34,872. The Russell up a solid 0.7% right now. You're talking about trading at 2250. We got some action in commodities. We got crude back above $75. We got gold trading up almost $20 this morning at 1827. We have some remarks from Chairman Powell making their way out already this morning. We got the 10-year rising 12 ticks now to 133.11. We got the 30-year up 23 ticks this morning at 162.05. And let's jump over to the action that we have going on this morning so far. And we will jump over to Chairman Powell as we get some remarks. Let me pull this down. Said Wednesday that the economy needs to improve more before the central bank would change its ultra-easy monetary policy. So remarks prepared for the House Financial Services Committee. Chairman Powell noted improvements, but said the labor market in particular, well below where it was before COVID hit. We should be aware of that. Noted that the Fed's benchmark of substantial further progress toward full employment and stable prices remains, quote unquote, a ways off. So that hits the market just prior to 9 a.m. Call it about 8:30 a.m. that hits the market, and you see kind of the volatility. Now prices, they were already kind of rising from there. You see the fall off we had yesterday, right? That's the 30-year. We'll jump back to the 10-year here. We had a dive early in the day. We had a dive late in the day as we got an acceleration to lower prices in the market. But just like that, folks, we get it all back from where we were at about 12:30 yesterday afternoon in that 10-year up 12 ticks right now at 133.12. And we jump over to the volatility index this morning. We get the VIX heading to a 15 handle at 1626. All right, so we have tech stocks surging higher. Check out some of the accelerations going on in Apple, Microsoft, and the likes. You got Apple up almost $3 pre-market this morning. To put things in context, folks, that's adding about $50 billion market capitalization to a company like Apple. It is such a large company that you almost don't realize the swings in market capitalization that is occurring on a daily basis in this equity. But you're talking about 16.7 billion shares approximately outstanding for Apple. You're approaching 2.5 trillion, folks. I think we're going to hit that number because I think this is calculated as of yesterday's close. So you're talking about Apple potentially on its way to a $3 trillion valuation. You're going to add 50 to that number probably on the open. That's going to bring you to $2.52 trillion market capitalization for Apple. But what does they have to do with? We got a couple stories going on with Apple. The first big one here, this one probably driving most of the action, as you have Apple seeking up to 20% increase in new iPhone production for 2021. They're targeting 90 million shipments of this year's new models. Iterative iPhone upgrade to boost chips, cameras, and displays. So Apple, this comes from them asking their suppliers to build as many as 90 million next generation iPhones this year, a sharp increase from the 2020 number they had. Let's see. So they get in there. In recent years, it was roughly 75 million units. That's where they get about a 20% bump from 75 to 90 million. It's an extra 15 million units, and they're selling those things at about $1,000 a pop. The upgraded forecast for 2021 would suggest the company anticipates its first iPhone launch since the rollout of COVID-19 vaccines will unlock additional demand. Pretty interesting that even in the world of a reopening, you're going to see potentially a surge in iPhone sales. Not necessarily something that you would think, but consumers want to get out. They want to spend. They got money saved up. It makes sense. The next iPhones will be Apple's second with 5G, a key enticement pushing users to upgrade. It will be interesting. I upgraded last cycle because it had been a while. and I wanted to upgrade because I knew if I upgraded, I got the 5G version of the iPhone. I'd be set for a while. It's next generation. It'd be interesting to see how many people did not take that chance to upgrade with the first 5G phone coming out. The upgrade will be more incremental than last year's iPhone 12. That's exactly what they're saying. They're emphasizing processor, camera, and display improvements. Folks, I got my iPhone 12 right here. It's got an outstanding processor. I'm not even sure what's in it, right? I should know, but I'm not. It's got an outstanding camera, and the display is amazing, all right? I'm not sure how they're going to upgrade it. It's always interesting how Apple plans to do this. It was a big upgrade to the last one. Like I said, you got 5G. It had been a while. It had been about 3, maybe 4 years since my last upgrade. My phone's battery was suffering pretty dramatically, so it made sense. But they're talking about 90 million units, and it's not just a speculation. They're going out to their suppliers with that number, and the market is paying attention in a big way. And as a result, we got Apple up almost $3, as I mentioned, market capitalization-wise. Amazing. You're talking about $50 billion in market capitalization that we add to it overnight. You jump to other shares. How about Microsoft charging higher? We just made a high print pre-market of $282.99. You're still trading up about $1.50 this morning at $282.47. Google shares up a bit, 26.33. You closed at 26.19. I believe that's an all-time high, 26.40 yesterday. Is it? It sure is. All-time high on Google yesterday. We jump over to Amazon. Amazon shares, 37.73. We got a little bit of a pullback. We're going to open by about $30 higher this morning for Amazon shares as well. All right. The other Apple story out here that's interesting in terms of teaming up with Goldman Sachs, they're going to offer a buy now, pay later service to rival Affirm. So this first partnership, Apple could boost Goldman's consumer push. You got two angles here in terms of Apple's angle and Goldman's angle. Folks, I encourage you, if you can pay for something now that you're going to buy, pay for it now. We live in a consumerism society where everybody loves pushing things out to credit. It's a bummer, unfortunately, how often people purchase something that they can't afford right now, that they don't necessarily need right now, that they end up financing, and even financing at 0%, okay? If you need it right now and you can finance it at 0% and it's not an excessive purchase, 0% deals make a tremendous amount of success. Makes sense, not success. Hopefully they turn into success. But many times, I'm talking about where you're financing, a couch for 6 years, some of these commercials that you see, right? You're financing something that is a luxury for a period of years where you're going to be signed up to payments that you can't afford right now. There's necessary needs in society and life that you have to sometimes finance out. I understand, but I hope the trend does not start that everybody just starts saying, you know what, instead of spending $600 today on a computer or something like that, I'm going to purchase it out and stretch it out over a couple months because I can't afford $600 today. So what I'm going to do is I'm going to pay, and they talk about here, what it's going to do is it's going to allow them to push out payments. And now let me get into it exactly. It's going to be 4 payments, 4 interest-free payments. So let's get into it. The service is currently planned to work as follows. When a user makes a purchase via Apple Pay on their Apple device, they will have the option to pay for it either across 4 interest-free payments made every 2 weeks. So you're talking about only pushing it out 2 months. All right, it's 4 payments, but you can see how somebody might not have $600 for a theoretical purchase of whatever you're talking about. So instead, they say pay us $150 every 2 weeks for 4 weeks. Seems like it makes more sense. You're not paying any interest, but do you have that money for 2 months to pay? If you have that money for 2 months, why aren't you paying it today? Nonetheless, it's going to be my trying to maybe transition people to Apple Pay. We'll talk a little bit more about it when we get back, but Apple up in a big way. NASDAQ 100 up by 100. We'll be right back, folks.
Ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Welcome back, folks. We get the S&P right now up 16 points, trading at 43.77. You're bumping right up in terms of the highs we had yesterday before we had a couple sell-offs. Pre-market on that hot CPI number. We also got the sell-off at about 1 p.m. Eastern time, and you're bumping right up to that level right now, reaching near all-time highs in the S&P. Remarkable acceleration in the NASDAQ 100, actually above where we were on the open yesterday. You sold off again at about 1 o'clock in the NASDAQ as well. As I mentioned, you got Apple dramatically higher. You got Microsoft dramatically higher as well. Tech stocks across the board trading higher this morning. With that in mind, folks, let's jump over to our man Kevin Hinks. Every trading day, 11 a.m. Eastern time, fast market from the TD Ameritrade Network. Kevin Hinks, Alex Coffey, and the team do an outstanding job of breaking down the market action. Folks setting up theoretical, hypothetical trades in the option market, talking defined risk. Kevin Hinks, we got Chairman Powell out there talking about we're a ways off from where we need to be in terms of this market. What's going on this morning, man?
Yeah, here's his prepared statement that came out, Tommy, the same time that PPI number hit. So if you're sitting on a bond desk right now, you probably have whiplash from what just happened in the bond market. His statement said, inflation has increased notably and will likely remain elevated in the coming months before moderating. And there it is, Tommy. That sent the bond market up higher and yields back lower. So Jerome Powell, his posture is that of a strong hand when it comes to interest rates. He believes that these inflationary pressures that we're seeing right now are all temporary and will subside. And so until he sees the whites of inflation's eyes, he is not moving on rates, Tommy.
I completely agree, man. It's a great take on things, and it's so interesting how he kind of gives himself leeway, in my opinion, in terms of no matter what happens in the next month or two, he's already telling us that they're going to remain high. Transitory is going to remain for a period of months, and then we have those expectations that they're coming down. So it almost gives room no matter, we got a hot CPI data number yesterday technically, but then you get into it, right? We talked about it yesterday, talking about the used car number, a third of the impact. It seems like he's giving them the room, and it's probably just because of how he feels, that no matter what's coming down the line for these transitory, in his opinion, prices, he's willing to write that off for the next month or two at least, or whatever that time frame is in his head. And it is interesting, right? We have, in terms of the extra benefits expiring in September, Kevin, we got people going back to school, kids going back to school, freeing up parents for a little bit more flexibility in the job market as well. So it's going to take some time for some of those factors to subside, but really interesting when you see it actually put on paper by the chairman of the Federal Reserve saying it's going to remain that way, and then we're going to see it. And the market has to like that, man, because it kind of means that no matter what kind of pressure we see, Kevin, over the next month or two potentially, I think you're right that he's going to hold strong on his feeling that it's transitory unless almost proven otherwise, which is going to take some time, right? To prove him otherwise, we got to wait some time, I think, in this market to have that type of data.
Remember, Tommy, you're talking about a Fed that has been trying to get to 2% in terms of growth for 8 years, 8, 9, 10 years. And so, Jerome Powell is willing to let this run slightly hot for that. So I think it's really interesting. There's a lot of rhetoric out there, even from Steve Mnuchin this morning, saying that they'd like to see the Fed start to dial back. But so far, Jerome Powell is steadfast in his posture that he wants to keep rates and let inflation get to a healthy level before putting the brakes. Remember, if he stops the asset purchases, which will be the first thing that they do, that'll be the first sign that the Fed is starting to move rates back up. If they decrease or halt the asset purchases, that right there will move rates higher. But he has shown no interest in raising rates just yet.
I think what's so cool is it's all speculation at this point in all of our opinions, right? I mean, we're living in this world that's never been defined before in terms of living through the type of shutdown we have, and then we're trying to kind of turnkey start things back. So there's a lot of personal speculation going on. We all have our opinions in terms of where inflation is and how much it's going to sustain over the next year. But nobody's opinion matters more right now than Chairman Powell. And I think he's just being, like you talk about, really forthcoming with how he feels, where we're going to be. And the data gives him at least the case to make that argument. And he's going to wait for the hard data, man. And we're not going to get that hard data in terms of used car prices, in terms of reverting to the mean, kind of as they put it sometimes, of normalcy in this economy. And we're not normal right now, man, with the type of stimulus, with the type of unemployment, with the type of commodity prices, all the stuff that we're aware going on. So we got bank earnings as well this morning, Kevin, coming out. A little bit of a mixed bag in some of the bank earnings. But, man, how about these tech stocks, Kevin? I was talking about Apple, man. Apple on its way to a $2.5 trillion valuation this morning, Kevin, up almost $3. Apple's got 16.7 billion shares outstanding. You're talking about $50 billion market cap add overnight. But they're going to be potentially pushing out 20% more phones, 90 million phones, Kevin, on the second iteration of their 5G phone, which I find remarkable. I upgraded on the first one, but if they're able to do that, man, really remarkable when you talk about a reopen of the economy. And I didn't think people would be buying phones during a reopen, man, but it just might be that broad with the amount of money that consumers have in their pockets, man.
Yeah, Tommy, it's interesting. It seems like once a quarter that there's some rumor from some of the Apple suppliers that, production is going to go down and slightly, and then it never seems to materialize. Well, here's the opposite, right? Now they're guiding or pre-announcing that production is going up, and the suppliers are putting more in. So, yeah, that should give Apple a big lift. It's trading over 148 right now to start the day. So, yeah, that's a little counter trend to the news reports that we've seen in the past. So, really powerful for Apple.
Pretty lofty expectations, man. 90 million phones on the second iteration of 5G coming up. That company just marches on. And then, of course, they got a double whammy. They're going to be offering buy now, pay later, something Americans love most of all, with Goldman Sachs in trying to transition people over to Apple Pay, which I thought was pretty cool as well. So with everything else going on, Kevin, we still got some earnings coming out. What are you guys going to be chatting about on the program coming up at 11 o'clock?
More financial earnings today. As you know, we'll do Morgan Stanley. We'll do, I believe we're going to start getting into some of the other names, but I know that Like Folio is doing a presentation on some of the I can't figure out what it is. I can't read the email right now. But like Folio's got a great presentation. We're finishing up some of the financials, so we'll look at Morgan Stanley and some of the other financials today, Tommy.
And we got Morgan Stanley, man, bumping up near their all-time highs. We're trading at 93.21, give or take. Yesterday, we got a high of 94.27. I'm pulling up the Analyze tab on the Thinkorswim platform, folks. $2.20 expected move right now. That's as of the close of yesterday's action. Well, Kevin, man, we look forward to...
Penn Gaming is what we're covering today.
Sorry, say it again for me one more time.
DraftKings and Penn National Gaming.
Oh, man, I got to tune in, man. You got a little online gambling going on. Really remarkable industry, the run that those two companies have had in an exploding industry, to say the least. Well, Kevin, man, we look forward to the program, as always, at 11 o'clock. You have a great one, man.
Thanks for having me on, Tommy.
Thanks, Kevin. Take care, man. Folks, tune in every trading day, 11 a.m. Eastern Time, fast market. If you're in the options market at all, folks, if you're not, if you're just learning how to get into that market, you want to learn about setting up trades, earnings season is just kicking off. Download the Thinkorswim platform from a banner on the front page of TFNN.com. Get a demo account. Walk through these option trades, folks. Defined risk. That's what it's about. We'll be right back.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. We got the S&Ps up 19 points right now, 43.79, bumping up near all-time highs of yesterday. We get the NASDAQ 100 right near that level as well. We're up by 100 points on the dot. That's 0.7% in the green at 14,963. The Dow bumping up against that level as well, up by 130 points in the Russell, up this morning by 0.5% at 2246. Russell, the big laggard here, when you talk about where we are near all-time highs, all-time high 2366. You're about 120 points from that level versus the S&P. You're about 4 points from the high print. NASDAQ 100, you're about 30 points in a 15,000 point index. And the Dow even, you're now 70 points from that all-time high across the board. Let's jump to some of the tech stocks that we've been talking about. There's your all-time high print on Apple. We're trading up 1.6% this morning on the acceleration, giving it back a little bit on the open. We got Microsoft shares right now trading up 0.4%. Amazon shares trading up 0.8% on the open. All right, let's jump over to some of the stocks that had numbers. We got Delta reporting their numbers. First profit since 2019 thanks to federal aid, improving revenue as travelers return. Delta said its third quarter revenue, would likely come down up to 35% below 2019 levels as they are still trying to recover in this economy. Let's see. Yeah, they had $12.4 billion loss last year. When they get into it, a profit of $652 million, 5-quarter streak of losses. Now, the one thing I'm going to comment on here, folks, is that these airlines, all right, if we operate a business, if you operate a small business, all right, and you keep no cash on hand to operate that business, if you have an unforeseen slowdown of epic proportions, now you don't have to plan for a catastrophic event if you're willing to take the risk that if a catastrophic event occurs, that you'll be in big trouble. Otherwise, you should be taking those risks of catastrophic events occurring one out of how many times, right? The airlines have made so much money over the last 10, 15, 20 years, whatever it is. All of a sudden, they have a slowdown of epic proportions for a year, and they all would basically go bankrupt if they didn't get federal aid. Meanwhile, shareholders of those companies, private companies, okay, took all the profits out of their business endlessly. Now, what would happen in a small business, what would happen, okay, is that you might have that owner then dig into their pocket to come back to some of those profits that they took from their business into their bank account, okay, and put it back into the business for that year. Well, that's not what happens in these companies. These companies don't have that money because they gave it back to their shareholders, okay, which is now gone from their balance sheet, and then they come to the government for federal aid. Now, here's the thing. That makes sense, okay, because we cannot have the airlines faltering, okay? You can't just have just normal economics of supply and demand regulating that industry, because normally what would happen is you'd say, well, let business forces rule out and supply and demand will pick winners and losers and the best companies will survive, which is right. But what would happen is that you would have airlines faltering, going into bankruptcy. That would dramatically hamper the growth of business over the whole country. So you can't let that happen, right? Well, if we can't let that happen as a country, which I think we all kind of agree on, you just can't have all the airlines go bankrupt if we have something like COVID take place, okay? So as a result of that, we've made the decision that as a country, we need the airlines to be in business. So if they have problems, we have to come in and support them. I'm generalizing everything, but follow along. And if that's the case, and those companies continue to deplete their balance sheets where they need federal aid in times of distress, then they should be regulated to keep money on hand in tough times as opposed to just giving it back to shareholders, because when bad times hit, citizens are forced to bail out private companies because even the companies themselves say the country needs us, and they're right. But if they're going to behave in ways that basically it's a matter of if not when that they need federal aid, then they should be regulated, that they can't just take all the cash from the market, give it to their shareholders, and then come to the federal government for aid when it's necessary. All right? It was only 5 quarters of losses, and now they're back to a profit with federal aid, but they're going to be back, folks. All right? They should have kept some of that money on their balance sheet for tough times. If they didn't, normal businesses would just be allowed to go bankrupt. They would be punished for their bad business decisions of not keeping enough cash on hand for a worst-case scenario event to keep that company alive. Executives decided it was in their best interest to just give that money away instead of keeping it on their balance sheet, All right. And then when tough times hit, they came to the government for aid. If that's going to be the case, they should be regulated because it's a matter of if not when it happens again. And we need airlines. So we can't just let market forces dictate that they go bankrupt, which was actually what would be the case. And that would disincentivize other companies from doing that in the future. There's no disincentivization of doing that in the future, okay, if the government just bails you out. All right. If they realize that tomorrow that company could go bankrupt, there'd be more incentive to keep cash on hand instead of depleting the balance sheets, just factoring that business is going to go on as usual. Folks, you can't just plan for best case scenarios. You're supposed to plan for a worst case scenario. And if you don't, you get punished. And the problem with the airlines is they don't get punished. All right. And they shouldn't, because we'd all get punished if they went bankrupt. All right. So keep that in mind when this conversation goes on for the next years, because it's going to happen. They got a lot of money. They needed a lot of money to stay alive. All right. We can't just have airlines going bankrupt so that we can't do business and travel across the country. But nonetheless, they're back to a profit, and they're going to try and pretend like none of that ever happened. But Delta, only up 0.2% after being up to about 42.50. This morning, we're at 41.44. S&Ps, we just made a high print of 43.84.50. There you go. We got the NASDAQ up 96 points right now. We got the Dow up 115. The Russell catching a little bit of a bid right now as well. We got gold really catching a bid this morning, holding on to some of those gains, up $16 at $18.26. We got the crude market right at around $75. And let's jump to the note and bond market. A little bit of a recoil from where we were. We're still up about 10 ticks right now at 133.09. Let's check out the volatility index. 16 on the dot as this market just defies logic. Higher prices across the board on a consistent basis, folks. Remarkable, the records that we keep making. All right, jumping around to what else we got going on in terms of headlines. This one was interesting. Now, Kathy Wood, of ARC. I've made comments before that I think whoever is her PR person should get a raise over the last year, because the amount of articles and press that she receives, sometimes rightfully so, because that fund had quite a ARC. There we go. Had quite the run from $33 at the low of COVID to $160 when Tesla was peaking out there in terms of everything going haywire for tech stocks to higher prices. All right, she was huge in Tesla. Let's see. February 15th, ARC was at the max. Where's Tesla? There it is. Not surprising, folks. February 15th, give or take, you had Tesla hovering around that 900 point. I mean, her chart of ARC basically looks like a chart of Tesla, right? I mean, there's the chart of Tesla over 3 years. There's a chart of ARC. Talk about a mirror image, okay? Excuse me. What she says in here, though, I tend to agree with. And when somebody like this, who loves riding the technology momentum of things, she loves, making bets on the future of her own bias, right? She's just saying tech is going to be the way it's going. We're plowing into all these growth stocks. They accelerate higher. But guess what? She's not touching China. She sold her China stocks, folks. And I would say the same thing. The available nature for those stocks to appreciate in any grand nature. I mean, China just smacked them down in epic proportions, folks, and I would be very, very careful doing anything over there with China. And Diddy, we'll put it on a 15-minute, down on that news, down 2.5% on the open. We'll check out Alibaba, and we'll be coming back talking Forex with our man Teddy Kegstad from forex-trading-unlocked.com. Stay tuned, folks. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&P is up 22 points right now. We just had a high tick of 43.8450. We're up near all-time highs. You're talking about 0.5% in the green this morning at record territory. Folks, let's jump over to our man, Teddy Kegstad. You can reach Teddy every trading day at his website, forex-trading-unlock.com. We talk to Teddy every Wednesday at 40 past the hour. We're talking Forex. Teddy Kegstad, good morning.
Good morning, Tommy.
How we doing this morning, man? What are we looking at in the market of Forex? I know we have some action. We got crude hanging tough around $75. Always think of you in that crude market with the strength it's had recently, man. But what do we got going on in the Forex market for our weekly update this week?
Well, I'll tell you what, choppy is what's going on in the Forex market. I mean, it's basically a tug of war between bulls and bears, but yet the dollar bulls are actually kind of winning, even though it doesn't look like it today. But you know how we've been talking about divergence? It's definitely proven now since we talked last week. If you look at the euro, okay, it made a newer move low yesterday versus the dollar. The dollar was strong yesterday. It was very, very strong. Then it reversed gears overnight. Now, obviously, we have a little bit of a recoil with these other, basically all of the different cross rates versus the dollar. Everything is stronger, okay? But if you look at what's happened, though, as far as look at Europe, you have the euro that yesterday made a newer move low after coming off of a lower move high. Now you have the British pound, however, that had made a higher move high and now has made a higher move low as of yesterday. So I would key off of the lows, the extremes from yesterday and whatever cross rate you're looking at, because that's where our threshold is, because the trend actually relies with those points, meaning that if the euro is up today and all of a sudden it reverses gears and takes out the low from yesterday, that's very bearish. I mean, the trend still is in place, okay? So that's definitely confirmed on what's going on right now in all the cross rates. But we have the divergence, meaning that while the euro-US dollar is a bear, obviously, in trend, the British pound-US dollar is actually becoming in a recoiling short bull trend. Now, I'm looking at that as more of a correction right now, so meaning that on any given day, for instance, both the euro and the pound are up today. But the euro is coming up off of new lows. The pound's coming up off of higher move lows. See what I'm saying? So they're not really trending overall together as far as strength, meaning the euro is weak and the pound is actually holding up. It's kind of what we're seeing with Australia and New Zealand dollar, where Australian dollar is in the same case. We talked about, besides the fundamental economic things and political things going on there, that these repercussions are that there's a bear trend in place in that one, whereas not so much in New Zealand dollar. So where on any given day they may coincide with each other. Like yesterday they were falling to the dollar, but the New Zealand dollar is doing like the pound. It's coming off of a higher move high, and now it's at a higher move low, versus the Australian dollars like the euro. So I think that's something that your FX traders really need to be mindful of right now. That's where, remember how we said like divergence is in play, so don't just watch the dollar index as your major indicator right now. And the biggest thing is the bonds and the 10-year, which you were talking about the 10-year earlier. So one last thing with that is that they're coming off of higher move highs. Yesterday, they stamped a higher move low. If the 10-year and the 30-year reverse gears and take out the lows from yesterday, that means the bond traders are really skittish on inflation, and that's what everyone's watching right now.
Yeah, it will be interesting. And I was just going to add, as you pull it up, pretty defined, like you talk about. I look at a lot of equities, or maybe just looking at the equity indices in terms of futures, but lower lows and lower highs, like you talk about, man, pretty well defined on some of those charts you're talking about. I like to see that on trends myself. We all know that the markets trade with variance. They trade within trading zones or whatever it is. But when you're seeing lower lows and lower highs as that trend continues, that's something I like to look for, or higher highs and higher lows, right? On the flip side of that, vice versa.
Right.
Yeah.
Right. Absolutely.
Now, of course, we have Chairman Powell. He's out here today and tomorrow. I think he's front of the Senate tomorrow. His remarks already out there, pretty strong in terms of what he's talking about. We're a ways off is how he puts it. How do you see it, Teddy, that 10-year shaking out, man, in terms of where that drives some of the action? Because it is interesting, of course, the run we got up there to above 134 technically. We had a 10-year yield of 1.25%, I think, briefly on that run, settling back in at about 1.35. I was talking to Kevin Hinks to kick off the program at 9:15 and just kind of talking about he's kind of giving himself some room here to status quo it, at least for a few months maybe, where he's already seeding the fact that prices are going to be hot for the coming months, right? But then he expects things to change. Interesting to see how that plays out in light of basically he's saying, the data is going to say it's going to be hot for the coming months. We kind of all know that, right? And where we are after that period is what he's looking for some evidence maybe.
Well, my whole take on what's going on right now is I look at Chairman Powell and the Fed as how the National Association of Realtors was from 2005 until 2008, and they were saying, "Don't worry, the real estate market's fine," while it was tanking. So the Fed's view on inflation is complete just denial. It's not denial; it's just propaganda. And bond traders are watching that. So like today we have the oil numbers. Tomorrow we have the unemployment claims. Let me tell you something: if that number doesn't come in a positive light, meaning that we're going to hold the bond market in check, if it does look inflationary or bad for the economy, we are going to see new lows trading in the Treasury bond and 30-year and the 10-year note. So it doesn't matter what the Fed says. The bond market sees inflation. And see, the thing is, the Fed is looking at lagging numbers. So it's really easy for them to say in their forecasting that, oh, this isn't going to be so bad. However, when we're talking about having this conversation 6 months from now, right before Christmas, and unemployment is still where it's at, and inflation has not gone down or leveled off, what is the speed going to be then? That means that everything they're saying now is they're not being proactive. They're actually just being in denial, that's what the real estate industry does. They're taking the used car approach of saying, oh, the market's never bad. It's always a good time to buy. Well, it's not. It's just not the case, So I think it's just blah, blah, blah. And I think the bond traders are definitely going to take advantage of everyone that buys into the Fed speak, for sure.
Boy, that's what makes a market great, man. And if we are in 6 months from right now seeing the same type of unemployment, man, it's totally possible too. And listen, I'm with you. I mean, the goal was to turn the key and all the jobs come back, right? And I know that's theoretical, it's rosy, that wasn't exactly how things were going to work, but that's kind of the message of all the stimulus. You keep the keys in the ignition, and that way you turn it back on. That doesn't seem to be the case, at least over the next couple months, man. Let alone, if we're going to get there in the next 6 months. The real worry right now for the Fed pulling back is you're talking about inflation. And yeah, it'll be interesting, and it's coming to roost, as in we're going to find out in 3 or 6 months, because I agree.
And what happens if there's another COVID wave, even slightly? Just slightly. It doesn't
Listen,
even
we're
have
in
to go into
Florida. It's a
lockdown.
real deal,
Inflation.
man. It's a real deal in Florida, I tell you. You know, I'm vaccinated. My family is. I got young kids, though. It's weighing on economic decisions, to put it just bluntly. You know, in terms of bringing out your kids, we're at some pretty harsh levels in Florida, folks, and that's, you know, we're back now. You know, my family's vaccinated, but you young kids that can't do it yet is something we're aware of. Am I going to take them to Disney? You know, I don't know just yet, man. We got like 5,000 cases a day among unvaccinated people, so that's going to weigh on things for sure, man. And that's Florida, unfortunately, you know, an anomaly right now in terms of the cases going on, but it matters. But 6 months, man, yeah, if we're seeing those tendencies, but like I said, the benefits end in September, kids go back to school, there's only so many excuses that can be given as to why things aren't happening like they are supposed to be, at least.
Right.
Well, Teddy, I always enjoy the conversation, man. We appreciate the
Thanks,
update.
Tommy. Me too.
And we'll talk to you next week, man.
Sounds good. You guys have a great week.
You too, Teddy. Take care, man. Folks, check out Teddy's work every trading day, forex-trading-unlock.com. We'll be coming right back to finish up the program.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&P's up 18 points right now. Market's kind of holding where we were in terms of pre-market. You had the acceleration at 8:30. We got PPI numbers. We also got Fed Chairman Powell's remarks released. He'll be in front of the House today. I believe that begins at noon Eastern time. We spiked to 43.84. We're trading at 43.79. Tech stocks higher as well. And folks, Normally next hour, we have our man Basil Chapman. He's not going to be doing his program live today because he is hosting his multi-day webinar. There's still time to get in there. Basil began at 9 o'clock in the morning. The market just opened 24 minutes ago, folks. He'll be in there till 4:30 p.m. today. Everything will be archived, so if you missed the start of that program, you can check out the archive, and then he'll be in there as well for a follow-up session July 28th. You're talking about 9 hours of education, folks. It's $295. You get a month of his opening call. That's $149 alone. If you're thinking about signing up for his newsletter ever, folks, a great time. You sign up for the webinar. You get a month of his newsletter. You attend an all-day webinar today. That will be archived if you can only attend some of it. And then 2 weeks from today, you come back with whatever you have questions on. 2-hour follow-up session in the market. That's going to be, folks. All right. And he's also going to have maybe some live trading to put into practice what's been talked about July 28th as well. Check it out on the front page of TFNN.com. All right, folks, let's jump around to some of these stocks as we finish up the action. As I mentioned, they're talking about Rochelle and the Tigers Den over at YouTube. MasterCard, yeah, check out some of these payment cards, payment companies. MasterCard up 1.7%. Man, this company, right? You put it on a daily, right up near the all-time highs of 401. You got Visa trading higher as well. That's an all-time high, I think, up 1.2% today after charging higher yesterday as well. The PayPal companies, not so much, up about 0.6%, right up there near all-time highs of 309.14 as well. And let's finish it off with Apple. Still above 148. You're up 1.7% on Apple. Folks, we were just trading at Apple at 123. You added $25 to that company just since June 3rd. Every dollar you add is $17 billion of market capitalization, folks, and they added 25 of them. What is that? That's talking about 170, 340. You're talking about $400+ billion. And what are we at right now? We're above 2.5 trillion. No, 2.477 is the number, $1 trillion market cap for Apple. All right, folks, stay tuned. We're going to have a replay coming back. We're going to do the 10 o'clock update because Basil's hosting his webinar. Check it out on the front page of TFNN, but live programming for the rest of the day after that. Stay tuned, folks. We'll be right back.